All right, guys, welcome back. This is Surepips. All right, welcome back to our channel. Um, Today we are going to be doing a quick one, just as I promised some of us who actually DM me for this particular guide. I believe it's going to help us. It's going to help us. All right, so please, we just want one thing from you, your encouragement. We know this channel is actually starting. It's actually building up. It's actually, you know, at the preliminary stage. But then we still need your support. We still need your encouragement for us to continue dropping more educational videos and materials for all of us to win together in the forex market. All right, so a lot of people have been asking me, telling me, generally, or in a general sense, generally most people know how to uh, they know they know the number of they know what they want to risk in the market. They know how many pips they wish to set as their stop loss. They know how many pips they need to target. Remember, risk to reward ratio 1:2 and 1:3, depending on your preference and depending on your risk tolerance. All right, so a lot of people have this idea. A lot of people know how to do these things perfectly. A lot of people know how much they wish to put in a particular trade. All right, but then there is a problem, and that problem is many people don't know the correct lot size to use in a particular trade. That is where the problem lies. They don't know because you cannot just enter the market with any lot size. A friend of mine will say Cubana lot size. That is very, very dangerous. All right, so because you see the market moving and you just pump a lot size and put, of course, depending on your account size, there are some lot size you put, the broker won't execute the trade. All right, so but even then, maybe let's say you have a Profem account of $5,000 account, right? Or maybe $50,000 account, or $100,000 account, or $200,000 account, depending on your account size. You cannot just pump in a lot size like that, because the lot size that we all know determines what we make and what we lose. Right, so that is just how it is. So many people know how to do this. So many people know how to navigate through this process, but they don't really know the accurate lot size that will actually land you in your 1% risk, because there are some lot size you will use, it will not land you in your 1% risk. All right, so you will be overstressing the account, and at the long run you will not become a profitable trader. So guys, please, what we just want you to do for us is just to like, to subscribe to this channel, and comment, and so that we will be encouraged to be dropping more of educational videos as we make more research and as we learn more, and we'll be sharing it with us here. All right, so without wasting much of our time, let's go straight to the deal of the day. All right, so there is a formula that we use to determine the lot size that we are going to use to enter a particular trade. All right, so I'm going to write down the formula here. Please permit me, I'm not using my laptop. I'm using my I'm using a phone, not a smaller phone. I'm not using my big phone. I'm not using my laptop. I'm using a smaller phone for this recording. All right, the thing just came to me, so I just had to use the device I have with me to record this video, so that it won't skip my mind. All right, so let's just manage it and get what is necessary. So the formula to actually find this, our major concern is to find our lot size, and we know what lot size is. All right, if we don't know, then that means you're still a beginner. All right, so then you have to message me for us to pick it up from there. I will drop my number on the comment section, on the description box rather. All right, so lot size is, the formula to find this is LS is equals to dollar risk percent all over pip risk divided by 10. Right, this is the formula to find this lot size. Now let me explain the parameters. Let me explain the formulas bit by bit. All right, we already know that LS is lot size. So what does percentage dollar percentage risk means, let me add the risks here. What it implies is that, now let's say you are going with 1:2 risk to reward ratio on a particular trade. 1:2 risk to reward ratio. What it means is that, let's say now for this tutorial we are going to be using $5K we're going to be using $5K pro firm account, for instance. We're going to be using $5K. All right. So now you look at, you have a $5K account now. I'm trying to explain the dollar percent risk. You have a $5K account now. So what is 1% of $5,000? It's simple. 1% of $5,000 is 50. You can do the calculation by yourself and you see that you get 50. All right. So you have $5,000 account. So in this particular trade, what dollar percent risk means is that I am willing to risk $50 out of my $5,000 account. That is the 1% of the total funds in the account. That is what you want to risk. That is it. So now pip risk is that, what does pip risk mean? Pip risk means that how many pips do you wish to risk in this market? How many number of pips you wish to risk? Like in terms of your SL, like your stop loss, how many pips do you wish to risk? I will do a video on ways to properly set up your stop loss, because there's a way you set your stop loss, the market will sweep liquidity and then still take you out of the market and then still go the direction that you predicted for it to go. So there is a strategy, there's a way, there's a system, there's a method that you use to determine where to place your SL in the market. But so let's proceed. This is not part of the video. I'm going to do a video on that. So let's say in a particular trade, according to the way you are meant to set your stop loss, all right, maybe you want to risk 25 pips. Your stop loss, for the market to have breathing space, your stop loss was 25 pips downward. Let's say you are longing 25 pips downward. So this is what it means. How many pips do you wish to risk in the market? Now, when you go to TradingView will actually give you the number of pips as soon as you pick up your crosshead, or even in MT5. MT5 will show you the number of pip movement that the market has moved when you are selecting your SL. All right. So that is just how it is. So you take that value and it will now become your pip risk percent or pip risk value. So that is it. Then you divide it by 10. So now let's remember, you have $5K account, and then you are risking 1%, and then the pip value. So let's substitute into the formula and see what we get. All right. I hope this thing will not be okay. Let me wipe this. Sorry, this thing was going to be very rough, but then we already know what it is. So let's go. So what is your risk? Remember, $5K account and you're risking 50. So you put 50 here. 50. You are risking 25 pip. I have explained it, all right? So let's put 25. Now let's calculate. So 50 divided by 25. 50 divided by 25 will give us 2. Then divide it again by 10. So we have 0.2. If you are following me, so the lot size we are going to be using for this is 0.2. Simple. Very, very simple. 0.2. So you know that the forex market moves high. Every lot size, or the forex market generally moves in let's say 100,000 how do we call it now? But generally, let me not complicate issues. All right, let me not complicate issues. Let's not go to that direction. Let me not complicate issues. All right. Okay, so we have calculated and we are having $0.2, 0.2 lot size in this trade. Remember, we are risking 25 pip downwards. If we are longing, we are risking $50 for this trade. If we are wrong, no other. Now let's proceed. Now we've already find out how to get this lot size, right? Now let's check if what we actually did is correct. All right, let's check if what we actually do. Remember, in this 0.2, if the market move 1 pip, you are move 1 pip on your direction, you are making $2. That is what it means. If the market move 2 pip, you are making $4. If the market move 1 pip against you, you are losing $2. The same way. All right, so let's proceed. Let me wipe these guys. Let me clean this up. I hope we okay. So now we said that we are risking. Want to know how much we are risking. Let's see if we will get the value back. All right. So we are risking $2. We are risking $50. Sorry guys, so sorry. So let's do the calculation. So let's say this 0.2 now lot size that we've seen now, 0.2. Remember what we are risking? We are risking 25 pips. All right, 0.2, which is actually $2 per. So we are going to be using $2. So $2 times 25. You have 50. Are you seeing? $2 times 25. If you are following me, we have 50. Remember, our lot size is 0.2, which is equivalent to $2. So we have 50. That means we no matter what happens, we are risking 50. No matter what happens, we have 25 pip downward movement. We are risking 50. Now let's see how much we will gain. Since we are using 1:2 risk to reward ratio, let's see how much we will gain if the market goes in our direction. All right. So remember 25 will be times 2. So let's say $2 times 50. You have 100. It's simple. Very, very simple, guys. You have 100. Please just watch this video over and over again. You understand. You have 100. As simple as that. So you are risking $50 to target $100. With this lot size you've used, you can get it accurately. Imagine somebody is using 0.1. Or imagine somebody went and be using 0.3, 0.4, or even one standard loss, one lot size. One lot size. Which is about each pip movement should be about, like, let's say $10. All right, let's say yes, $10. So this formula will help you reduce your risk and help you gain accuracy in the market. It will help you please go over this again. If you have any question, ask me. This formula will help you to determine your lot size, and you see that we went back to back test it, like to recheck. Just like to recheck what we did is good, is okay. You discover that we landed at $50 risk and then landed at $100 profit. That is if it goes in our direction. So guys, I want you to repeat this video over and over again and see how it works for you. All right, and see how it works for you, and it will help you to reduce a lot of risk. You don't just say, okay, maybe you see a setup in the market now, you just jump and pick a trade, randomly. No, it doesn't work like that. It is not secure for you as a trader. So this is the formula that you're going to use to determine your lot size. I wish and I believe that this video will be helpful to as many traders that are finding it difficult to navigate through this aspect, and it will also actually give clarity to a lot of people out there. All right, so if you have any question, you can DM me, you can message me, you can comment, and then I will reach out to you. All right. So guys, thank you very much. Remember, once again, subscribe, support the channel, and share and give recommendation. What do you think we should do to improve the channel? What do you think we should do to increase, to make it more good for both of us? All right, for all of us rather. All right. So thank you very much, guys, and stay blessed. Bye.